Hey, welcome back to my channel. So in this video, I want you to take out a pen and paper for some notes. If you're interested in how to purchase a rental property with essentially none of your own cash and then keep it as a refinanced property or keep it as a property that cash flows, that pays you every single month without you having to lift a finger, then this video is for you. I'll be sharing my screen and I'll be going into exact details and numbers. I'm gonna show you some screenshots of a closing statement so you can see exactly step by step how we just did this in a property in Florida, literally just closed last week. So thank you for watching this. If you like real estate, my name is Raul Balufe. I help people start or get that very first investment deal or scale up to 5+ deals per month, all online. What that really means is finding the best off-market properties to do what you want. You can either sell them and make a profit or keep them as rentals and make a profit. All right, so let's jump into the video. I'm gonna go over what they call the BRRRR method, the buy, rent, repair, refinance. And what that really means in a nutshell is you could buy a property cash, a property that needs some work, a property that needs some renovations, but you don't always have to have the cash in your bank. It doesn't have to be your cash. There's no law that says to buy a property cash, it has to be your cash. You don't have to save hundreds of thousands of dollars to be able to do this. So I'm gonna show you how we did this without using any of our cash, or what the process was, what the exact numbers were, how much we're really cash flowing every month, how much we're actually making net to my pocket every month. So you could see the reality of what happens in these deals and how to do it. And hopefully so it inspires you to go out there and do it on your own. So let's jump into my screen here. This is the property right here. It's a 1708 Derbyshire Road, Daytona Beach, Florida. So this property actually came through our wholesale business. What wholesaling is basically finding motivated sellers or finding properties that need work, speaking to the homeowner directly, right? Speaking of the we buy ugly houses, we buy houses type of things. We speak to the homeowner directly, we negotiate a deal, we get it under contract at a lower price because it's a cash deal. And then we either sell it for a profit or keep it or do whatever we want with it. So this specific property was a long story. It originally came from a text message, some of our text message marketing that we do. And we show our students and we set that up for our students, but really it's just sending text messages using some fancy platforms online. And we're able to reach out to homeowners and simply say, hey, I'm in the area, you're looking to sell your house. Hey, would you like a cash offer for your property? Things like that. So this seller said, yes, we just inherited this property and we need to sell it. We can't afford it, can't afford the maintenance. I think it was like 4 brothers and sisters that they all inherited the property. Family passed, and unfortunately, that was the situation. So I got one of my friends involved, Cecil, and Cecil helped me do what they call a probate process, okay? And probate is a fancy way of saying somebody passed and it's going through court and we want to buy the house, so we got to go through the court and attorneys and stuff. It gets a little complicated. Well, anyways, we got it through a text message. They said, yes, I want to sell. I got somebody involved to help me finish the deal, and we finished the deal. So originally, and I'm going to show you what they call a closing statement or a HUD. So this was when we purchased it, okay? I could zoom in here a little bit more. So as you can see, we closed on this property, like we purchased this. So here you have settlement date here to the right. Here we have settlement date to the right. So May 4th, 2021. We got this one for $60,000. That's what we got it under contract for from the homeowner. I have the property pulled up here on realtor.com. Here you can see that it's worth about $172. You see some others for sale, but we actually got the property appraised by a real professional property appraisal and it came back at $170,000. So it was a nice deal. So we got it for $60,000. We sold it to ourselves for $45,000 of profit. So this is a little bit high level, but I'm gonna brief over it real quick. Most stories, we got the paper signed from us to the homeowner for $60,000. We agreed to buy at 60, they agreed to sell it to us at $60,000. That's step number 1. Like, just think about the power of that, okay? We spoke to the seller through a text message. We got them on the phone. We helped them solve their problem, right? They could not afford this house. They could not list it. They could not rent it. They could not fix it up. So their option was to sell it to a cash buyer, us. We helped them through this long process. It literally took like 3 months just to close this house. We helped them and we got the property for $60,000 when it was worth $170,000. This is in Florida. This was in May. So this is this market that everybody's saying there's no inventory, etc., etc. I'm 28 years old, okay? I don't really, I don't have like any fame or fancy things, but yet we got this property at this discount, meaning you can do it too. That's the only reason I'm saying this, not to brag, but it's more for inspiration for you, okay? So what we did was, if we were to sell this property to an investor, as is, what we call wholesale the deal, we could have sold it for 100 to 105,000, right? So we got it for 60. An investor would pay 100 grand for this house. And we know that because we did send it to investors and that's what they offered us. So basically, me as Raul, right, my wholesale company, although I own it, it finds these properties, but I purchase it from them. Therefore, so the 45,000 in profit goes to myself, but in that company so I could keep running. So anyways, we got it for 60. I bought it for 105 off myself, basically. Then we got a loan for 73,000, as you see here, from a hard money or private money lender. Therefore, and then these are all like closing costs and things like that. But the first page is what really matters. So meaning I needed, so see here, cash from borrower. So I needed $45,000, $45,839.69 to close this deal. To own the property, I needed to put $45,000 of my own cash to close this home, right? Got it for 60, sold it to ourselves for 105, etc., etc., etc. Okay. Now, what if you don't have the 45,000? In this case, I had the money, but I didn't really want to put it. I like to always try and do deals with zero to very little of my own cash. So what did I do? I went to my phone book or my Instagram followers or my Facebook followers or friends and family, okay? And I said, hey guys, I have this deal that I'm closing and I estimate I'm gonna need about 46,000 to close it. Does anyone wanna lend me the money and I'll pay you an interest? And believe it or not, a lot of people want to get in real estate. A lot of people want to invest, don't know how, don't have the deal flow, don't have a property under contract, don't know what to do next, even if they do have the money. So believe it or not, that's never been the hard part in our business. Therefore, I got somebody to say, yes, I'll lend you the money for $46,000. We typically pay back about 10 to 12% interest on that money, which will make it, let's do the math here. I don't remember the math on the top of my head, but let's do it here. Let's just round it up to 46,000 times, let's say we go on the high end 12%. So it's $5,500 in the year, okay? So it's about $460 a month on this money. So anyways, what we got them to do was, we got them to accept, instead of me making monthly payments for the 45,000 we borrowed, we got them to just take it all in a lump sum when I'm done. Okay, I'm gonna break all this down, okay, so it's not so complicated for you. Maybe you're following along. So if you're following along, great. If not, I'm gonna break it down on a little sheet of paper. So I hope you guys follow me, right? We have this piece of real estate right here. This is literally what it looked like. We got this piece of real estate. To purchase it, it required 45,000 of cash, okay? It's worth 170. We're buying it for 105. We originally bought it for 60, but whatever. Me as a buyer, it's 105, worth 170. So still a pretty good deal, right? It needed some work, right? As you can see, these were like the actual pictures of the property. But look, it was decent. It had nice floors in there. You know, Daytona Beach, Florida. It's a good area. Look at the kitchen. It's pretty nice. Decent floors. So I'd consider this like rent ready. It needed a little bit of work, a little touch-ups, but it's pretty rent ready. Now, 45,000 to close on the deal. Let me pull up paint. Okay, so we got the home and we said that we paid 105,000 officially, but money in is 46K. We're just rounding up here. But when I borrowed that, money in is 0K so far, right? You guys following me? $0. Because we needed 46,000 to close after the loan. And I got that, so then out of my cash, it's 0 so far, okay? So what do we owe though? We owe, let's go back and check. we owe 73,003 plus 46. So let's put 73 plus 46. Let's just round that up. Let's do it again. 73 plus 46. We owe 119,000, okay? To people, right? We owe a portion of that to the bank, and we owe a portion of that to a private party. So we owe 119,000. But the house is worth 170, 175, right? That's what we established. That's what we saw, okay? So I just want you to keep these numbers in mind, right? So we owe 119,000, but so far we have 0 of our cash. So what was our next step? Let's just remind ourselves here. So we owe 119,000. Okay. Now we have to pay for this money. So payment. So the payment for the first loan is, I wrote it here on the sheet. The payment was $432 a month for this 73,000. And this we're paying at the end. So we don't really have to pay upfront right now. This we pay when we're done. Okay, and I'll explain that now. So $432 a month. Let's go back to our paint. Payment is $432. Now, so what's our next step? So, all right, we closed, we borrowed the money, we signed the paperwork, we own this house. We own this property right here. Bam, it's ours. Not the car, not the Chevy. We own this property. So far we've put 0. Now, what's the next step in order to go for so now we did the buy, now we have to do the renovate, then we have to rent, then we have to refinance. It's a BRRRR method. So after looking at the pictures, what renovation does it need to get it rented? That's the question I asked myself. And honestly, it was very little. And especially how the market is today, there's people looking for properties all over. So my strategy was, let's see what this property rents for. Let me just show you. I think on Zillow is probably like a better place to see. I always like to see on Zillow. Zillow shows kind of like the better rental thing. Okay, so Zillow here. I mean, I'll save you the suspense. We ended up renting it for $1,400 a month. This is the area where the property's at. Let's put here for rent. Okay, look, there's one for $1,200. It's actually a pretty good deal because you rented ours cheap, more expensive than this. Home for rent. Yeah, you see, it's kind of like in our condition for $1,200. Then you have an 1,800 up here, 1,500, 1,000, 2,500, 900. So this is a really good comparable, but actually we rented it for more than this. Back then, when I bought it a few months ago, there was a lot higher prices. I think we could still get the same today though. So anyways, now we rented our property for, well, okay, so we renovated. Renovated is our next step, right? I probably spelled that wrong. And then rent, and then refinance. So renovated, basically where we landed was, we ended up putting 8,000 into the property. Now you're like, damn, but what if I don't have $8,000? Good question, that's why we're doing this video. So I did not put the $8,000 myself. You guys want to know how I found that money? Well, these lending companies, right? These people, this kind of sounds like a commercial for them, but there's a lot of lending companies that do this, okay? You don't have to use it, I'm just showing you this. But the lending company that we use was called Lending One. Here they are, right here. So a lot of these lending companies, hard money lending or private money lenders, they will lend you money for the renovations because it benefits them for you to have a better renovation so that you can increase the property, the value of the property. So if they have to take it back for some reason, you've increased the value. So, and they only lend you that renovation money when they see the quote from the contractor. They go inspect it and make sure that things are happening, okay? So they don't just give you $8,000 for renovations and hope you do it. No, they have a process and they make sure you do it, and the goal is that you do it. You know, we're not trying to scam anybody here or anything. So we got the quotes, we did this and did that. So Lending One lent us the $8,000 to renovate the property. So we still have zero money, right? Because they lent us this money. And they lent it to us at the same terms of this 432, right? I think the terms they gave me was 7.9% interest on the loan, right? On this loan that they gave us, this loan right here, they gave us 73,000. It was 7.9% interest that they gave me, right? Okay, so now we go and rent it. So we put it on the market for rent, and we got multiple, like we got a lot of applications. I mean, a lot. So what we did is that we narrowed it down to the best 3. I called the references, we picked the best one, and we rented the property within the month for $1,400. So we got our payment is $432. We owe, I get it, we owe the other money, but we're not paying every month. And our rent is $1,400. So can you see there the gain that we can make? This isn't the only expense, right? We have maintenance and other things, but gross, without adding any other expenses, it doesn't take a lot of science, or it doesn't take a lot of math to understand, okay, I owe $400 every month and my rent's $1,400 every month. Okay, that's pretty safe. I can make something here. Now we go to the next step, and it's refinance. So what I do is I went back to this lending company. I said, hey guys, to Lending Home. I said, hey guys, will you guys refinance me this property? Like, will you guys give me a long-term loan? What we're looking for in a refinance is a 30-year loan, low interest, and principal, interest, taxes, insurance. So PITI stands for principal, interest, taxes, insurance. This loan right here, this $432 loan, from this 73,000 is interest only. So every $432 that I pay, it does nothing to the 73,000. Does nothing. It stays the same, stays the same. As we know, that's nice for now, but it's not good. A PITI, principal interest, when you go and refinance, every payment you make knocks down your principal very little. So eventually you could pay it off in 30 years is what the loan is set up. But the goal is that maybe accelerate to pay it off sooner. But at least you're inching your way down to pay off your property. So when we go to refinance, these are the terms we got. Let me make this bigger. So originally I thought the property value was 180, but the property value came back at 170. This was my credit score at the time, so it shows you don't really need a great credit. Actually, I never miss payments or anything. I don't know why my score is that way. If you guys are watching this and you're good with credit and you can help me get to 750, please hit me up, get in my DMs, and I would love to talk to you because I can't figure out how to raise my credit even though I pay everything on time and I'm good with that stuff. So I just don't know enough. So anyways, they gave me 65%. That's 110,000. They gave me 5.25% interest rate, 1,500 origination fees, 30-year fixed, and we got so our payments 886, all that stuff. So here is the ultimate numbers. Basically, they give us a loan of 110.5 and at a 5% interest rate, 5.25, and my payments now 886. But now I'm paying down the property. So this is where the little bit of a challenge came in. Okay, we owe 110. They're giving me, oh wait, we will owe 119, yet they're giving me 110.5, right? So there is an $8,500 gap. There's 8.5K gap, okay, on the refinance. This is the only time that I actually had to dig in my pocket and use my cash. There's other ways to do it, like what I could have done if I didn't have the cash. Let's say I had zero money and I'm like, oh crap, I use this money, I owe 119, I got 110 back, and I got to pay back my other lender. What I would have done is I would have said, hey, I owe you 8,500. Okay. What I'll do is I'll pay you every month, and you can use the cash flow of the property to pay them back. And a lot of lenders will do that because they love monthly cash flow. I don't know if you guys follow me. Hopefully you guys follow me. I know I've been a little bit all over the place, but let's end this with a very simple document and let's just end it here. So we bought at 105. We put 0 of our cash. Then we borrowed 105 technically, right? We borrowed 73 from a lender, and then we borrowed the 40. What was it again? It was 40. We borrowed 46 from a person, which sums it up to more, okay? Whatever that number was. Then we got back 110, and then we were short 8.5K, in which we could have paid monthly, because what we gained, this is what we did all this for, okay? We gained a property, we gained a home, we gained equity, we owe 110, equity. We owe 110 and the house is worth 170. So we gained 60,000 of net worth. You guys follow me? We gained 60K of net worth. And we gained cash flow of, our payment was $880. Remember that here? Our new payment was, where is it? Our new payment is, where was it? Our new payment was $886. See that here? Our payment is $886, and our rent is $1,400. So let's do the math. 1,400 minus 886. So we got $500 per month. We gained 500 per month. But hopefully this whole mess makes sense. So let's say that we did have to squeeze out the cash and give $8,500, right? To pay off the difference of the lenders. So we put in $8,500 of cash, of our own cash from my bank account, from my Chase Bank, okay? I put in $8,500 at the end, and I'm making $500 a month gross. That will average out to about, let's call it 300 net. We'll make, from that 500, we'll make 300 per month net, okay? So let's do the math here. It's all about math. Let's say we make 300 per month times 12. It's 3,600 a year. And let's say we divide it by our investment, 8,500. 8,500. That means that we're making a 42% return on our money. So this, if we put this money, that means we'll make a 42% ROI on our investment, return on investment, return on our cash, and we raise our net worth by $60,000. We have a equity on $60,000. We make 42% return on investment. Whew. This is a deal that actually happened. It's so exciting to me. Like, I could talk about this stuff all day. And the biggest tip I could give you is, if you want to do this stuff, right? It seems like a lot. The first step, the only thing you should focus on is two things: is talking to homeowners or making offers. Talking to homeowners or realtors or making offers. The goal, this all started with a good deal. This all started with this deal right here. All started with this deal. Okay, let me go back to the picture so I could make like a visual, okay? Because visuals are good for you. It all started with this deal. Through text message, through a freaking text message, okay? A text message. And then you just start talking to the homeowner. You could see what their challenges are and help them through it. So, this is a good one, okay? I hope this video helped you. You could check out the numbers online. You could see it, so you could see it's real. I mean, I showed you all the closing statements. You could look at public records. I have no reason to lie to you. I have nothing to sell to you on this. I'm just simply sharing information because I hear this buy, renovate, rent, refinance thing all the time. And sometimes I don't see accurate descriptions of how it actually works or real life examples. People just kind of talk through it, which is okay, but I want to show you a real life example and how to do it with very minimal money. At the end, we had a little bit of a hiccup. There was $8,500. I ended up coming out of my own cash, but you have $300 a month in cash flow here, as you can see, 300 net. You can just pay them all the 300 and you'll be done with that in about 2.5 years, you'll be done paying that. So you'll make zero money on the property, but after those 2.5 years, you officially own the property with no money. And that's, you know, where else can you gain 60,000 in net worth and make that much ROI on a safe asset investment, okay? It's just so crazy. Something that's sellable, you can re-rent it, you can resell it. So it's just great. So anyways, that is the video. If you guys like this or want to see something specific, please hit me up on YouTube and on the comments below. And if you know somebody that's looking to do a BRR and they're like confused on how to do it and all that, please share them this video. It'll really help with the algorithm, and I want to help as many people as I can. So thank you guys very much, and I'll see you on the next video. Peace.